Alright, so this is a weekly review for May 10th, the week of May 10th, ending in May 10th. So basically, where we left off last week was the fact that we had this breaker here. We were in a sell program here, but we're coming into a sell program, but we're retracing now, right? So we have a clear retracement up into this premium arena. So from this to this, you can call it that we're in a sell program, but in my opinion, we broke through this breaker here, so we are on a buy program. So let's see, in this last week we had a couple relevant news here as well. If you look at the news here, we had Thursday at 8:30 news, so that was our only high impact news for the week. And relevant SMTs, seasonality, seasonality shows bearish, so but we're not seeing that on technically here. So before we look at the relevant SMT, right, let's look at the H4 POI and see what kind of price actions has been going on there. For our POIs, going back to the SMT, I didn't see any 4-hour SMT this week. So and then H4 POI. So if you look at the previous week, where are your H4 POIs? You have a fair value gap here. That's the only one so far, right? So this is Monday into Tuesday. We only have one 4-hour POI, only this one. There's no POI on the upper side, right? You can argue that there might be POIs here, previous high, but immediately there's no H4 POI within this week created. So only POI of interest was this. Once we get to that 4-hour POI, we close like that. So this is a trade that I took on Wednesday, right? If you look at Wednesday, we drop into that 4-hour POI. This is pre-New York session, right? If you look at this on pre-New York session, this is a hard drop pre-New York session. So what do you expect? What is the thesis here? So we're at a 4-hour POI. We took the market down, right, into an area of fair value. So market sees this as a fair value, and our objective therefore is external range liquidity here. If we're taking prices to fair value and the value where it's a manipulation, so this is a manipulation here, because price going to a fair value, that means you're going to take prices above a market price or below market price. So since, how can we tell that we're going to be going above market price if the fair value is here, right? So we can see that clearly on 1 hour. So this is the trade I saw in 1 hour, and that's why I'm going to try to repeat it on 1 hour. So I saw this pre-New York, we dropped into that 4-hour, right? And I wanted to wait for a 5-minute market structure shift here in order for me to take any type of bullish trade. So this is what I saw. I saw market go down, create this hard order block here, and then we started shifting market structure right at 9:30. I waited for not only change in state of delivery here, but we also had a market structure shift, right? So we have 9:30 from the get-go, we have a market structure shift, right? And anything coming back down into this order block is going to be a buy for me. So I did not get that buy. Well, I waited. I could have gotten that buy here, but I waited until 9:40 here. This is the candle I bought in, and I'll show you the call contract that I bought. And I waited for market to push up higher. So this is the options call that I bought here, right? So as you can see that I bought it around 1.51 was my fill. So $1.50 was my fill, right? So you notice this number is different, and bearish, right? We're at negative 32%. So, and the reason for that number being bearish is because we had a bearish drop here pre-AM session, right? The market has dropped already, therefore the option is red, right? So you're getting at a very good discount here, pretty much the bottom. And compare that price to this price here. I took this screenshot, same option, right? So same option price. I took a screenshot. Now you see how it's, instead of 17, right, or negative 32, this was, so this is the old one, so it's negative 32, it was 1.67, now it's $2. I think the highest I saw was that day close of New York AM session was 2.17. So it was a great catch there, and I was able to catch that based on the fact that we had changed the state of delivery here, changed the market structure, and we're dipping down. Now I took profit somewhere around here, and the reason being, if we are truly bearish, right, we could have come up here and dropped again. So that's why I started taking profit somewhere around here, into this discounted area. But the better way to look at that would have been that we are showing a market structure shift on 15 minutes. So we're closing that fair value gap, right? Inverse fair value gap here, support coming in. We change market structure here, shift to market structure, right? Change the state of delivery. You can also argue that we change the market structure here, right? So we have inverse fair value gap support coming in. So we should be bullish on a weekly basis, right? So we have a 15-minute time frame alignment, right? So we should be bullish on a weekly basis. Now, I was kind of confused, to be honest with you, because the seasonality this week going into it really confused me. If you look at the last 25 years of seasonality, you'll see that usually month of May, starting the second week, which we are in right now, typically is bearish, right? And we're seeing bullish activity on 4-hour chart, therefore we should be a bullish activity for the weekly chart, right? So that's why I was kind of struggling with that. I thought that we might go to this external range here and start to shift market structure here. Clearly we did not get that. We did not see that on any of these price action here. If you look at Thursday, right, next day model, you could have looked at this order block and the 50% that could have been your one trade, but the market structure was very clear actually on a 15-minute chart. And the reason being, we're looking for advanced market structure shift to form if we're going to be bullish, right? If we're going to be weekly bullish, we're looking for an advanced market structure to form at a 4-hour PDO rate, right? At a 4-hour point of interest, and we got that exactly. We got that. So if you look at it, we had this huge bullish movement up. So the next day, going into Thursday, what are you looking for? What are your PDO rates going into Thursday, right? Going into Thursday, your PDO rate it could be this one, right? Right. But we have a PDO rate of the wick of this candle. So wick of the candle is a PDO rate. Now what happens in a wick? In a wick, you have real quick price movement there, right? Therefore, fair value gaps remained, right? So the fair value was not offered. How can we see this fair value on a 15-minute chart? Because we are going off of the 4-hour chart. So we have a fair value gap right here. So market comes here on 15-minute chart. Now you could have dropped down into a 1-minute chart and have taken some type of a trade there. Now why would the market not come to this fair value? There's a tiny bit of fair value gap there. Why would market not come down there and start rallying? And what indications do you have that the market should come down here, right? Well, that's a good question, because do you have reasons for a market to come down here? Yes, because this is where the advanced market structure comes in. We are at a 4-hour PDO rate, point of interest. If this is truly our long-term low, right? Long-term low, followed by short-term lows, short-term lows, short-term lows, right? Have we made an intermediate term low? And the answer is no. Therefore, you have the probability of coming down here, not sweeping this low, sweeping these low, creating a intermediate term low here. Now, look at this intermediate term low that was formed in the London session, right? Intermediate term low was formed in the London session. Do you expect market to come down here, right? In a truly bullish day, you want London to accumulate, right? So you want London to accumulate / manipulate, right? Whichever. So London went below Asia low, so it manipulated, it accumulated down here as well. It created the low in London. So going into New York, what do you expect? I want to expect a bullish run there, right? So this would create an intermediate term low that was confirmed here with these lows, a short-term low here. So any movement coming back into this short-term PDO race, which happens to be this fair value gap, we have order block here at right at 9:30, comes back in. We're not going to waste time. We're going to shoot up, right? Next day model. We're not going to waste time. So this was a clear next day model as opposed to 1 hour, because the narrative made sense if you were thinking about the advanced market structure here. So that was the narrative on Wednesday and Thursday, and Friday we saw that it could have been a TGIF Friday based on the fact that Monday, Tuesday, Wednesday were the accumulation, right? It was a classic buy week here. So as a classic buy week, we can expect a retracement on Friday. So that's why the idea of TGIF Friday came in. And if we're to look at it, where would we have our targets for TGI Friday to hit? So our weekly targets would have been, I think NQ had a better, our weekly targets was up here. So if that, whatever that week is, can you match up a target on ES? You could have, I mean, order blocks here, but you could have based a trade off of NQ, right? Because the weekly target was a little bit clear. It was the fact that this was the high here. We could have easily taken out that high. And this high was taken out earlier in the week, so we could have reasonably taken out. This could have been our TGI Friday retracement. But this was a candle that aligned with NQ, this candle here, so we could have reasonably expect that to be our TGI Friday. And I think we did hit that. We did hit that on hourly chart, right? We failed to hit that, so we had a change in state of delivery on hourly chart here. And once you had a change in state of delivery there, you could have taken this 5-minute trade setup somewhere here. I didn't really look at it, to be honest, because for me there was no clear target on weekly, so that was the reason. Basically, I could not see a clear target here. We have come into this daily order or weekly order block here. We closed in that fair value gap. I really didn't see a clear target. Now, just if you were to look at old highs, this could have been a target. That's how but retrospect, and that's in a retrospect. I didn't see that while the market was playing out. So just to recap, the market, I only took one trade, and the reason being, I thought we were still in this range here, weekly range here. We were looking for a further push down, but instead we kept pushing up. So again, it looks like going into next week is going to be bullish week. So that's why I think this push up here is no longer, or invalidates this push down. So the market maker market is in a buy program instead of a sell program.